Yeah, I'm losing my edge.
Is the dollar starting to turn? The last few days, two correlated FX markets have moved in opposite directions. So we know the dollar index is comprised, and we're going to talk about that, 7 different currencies. So one of the goals that whenever the small exchange builds a product, and Mike, I, and the team really keep this as one of our foundational cornerstones, is that it simplifies the process of trading something. So we've seen a lot of this lately, is that these individual currencies have a very, not a story, because not a lot of this is story different, but just some, for currencies that are moving against the dollar, they still have their own component, and we see some very divergent behavior. I think this, you go back and you look, we're probably at some of the most divergent spots between, I would say, Mike, one of the two most correlated currencies, which are euro and sterling. We know Canada and Aussie have a correlation, certainly not the one it had a couple of years ago, but sterling and euro, by far the consistently highest correlated pair. And we're seeing something where the divergence here at 7% is pretty extreme. So what do we do with that, and how do we take a look at that? This becomes, to me, a little bit of a challenge, because at first blush you'd say, well, pretty straightforward. I'm selling the euro, it's up 5%. I'm buying the pounds, it's down 2%. The idea of that, though, is if you look at the individual pairs, the ranges they've been at throughout the balance of the year don't necessarily speak to that, short of it's an extreme. And I've often found, and I'm curious to see your thoughts, usually trade ideas, especially directional ones, are based on usually a couple of different assumptions, whether it's an extreme matched with a certain location. Especially on the pair side, it's important for me to, if I'm just trading, and whether this be a straight long or short of an individual outlier underlying or a pair, just saying it's at an extreme on the relationship usually isn't enough to hang your hat on for consistent tradable opportunity.
Yeah, I'd like to look for, I think price extreme is certainly helpful in determining your trade decision. I like to look why are we moving this way? And then certainly setting some expectations on, could this divergence continue to widen? Or do I think it's actually going to snap back? And I'm glad you highlighted this relationship here, because it had kind of gone under my radar for a little bit. I had always traditionally thought of euros and pounds as moving very closely together, similar parts of the world, similar, I would say, in their economic development. Granted, there's a lot of maybe turmoil happening as UK breaks off from the EU,
right.
But I always looked at them as kind of related currencies. And when you frame this title as, is the dollar starting to turn, it almost leads me to ask, turn against what?
Right.
Is it the euro relationship that's turning? Is it the pound relationship that's turning? And you see it really moving in two directions here with both of these currencies. It's almost too confusing to trade, but I think it's a great relationship you're showing if you wanted to, sell some euros or buy some pounds, and where you would look to enter and exit that position. But great highlighting here. How would you trade it? Would you trade it in the individual components or as one?
You know what? And it's a good question, because I don't feel the extreme itself is interesting. 7% is interesting, but I can't put anything else against it, because when you look at the location of the two underlyings, sure, the euro's up at the higher end of its range, holding on to, we're down a little bit, but holding on to 118 with a high slightly below 120. Pound much more, as you can see from the divergence here, back in the middle of its range. But the location of the two underlyings aren't necessarily at extremes. The relationship is. So then it becomes, okay, am I going to manage this with a bias on one leg? And you could argue, I want to be short euros. I'm going to use the pounds as a little bit of protection. But the one thing this tells me right now is I can't count on that being a defensive hedge, because there is such a disconnect between the markets. So for me, there is a little bit, I'm light on currency crosses. And I think you and I have worked together here for 2 wonderful years, and also in our previous life doing shows together at Tasty Trade. And usually we always have currencies as part of the discussion whether it be three guys or in a segment, and they've always been an important part of my portfolio. I'm very, very light on currencies right now. I just put on a pound iron condor, which is neutral. It was really running through the litany of what I like in terms of a product in the middle of the range. It seemed to me to be an interesting piece. The fact that they're not working now doesn't mean they realign at some point, but I don't think this is a trade right now. A lot of times I use pairs, Mike, to buy myself time. I may have an opinion on something, but I want a little bit more time because I don't know if my location is ideal. I can't build this out here. So the only thing I'm hanging my hat on is the extreme, and I don't like it. So when I say I don't like it alone in the world. So this really, part of this move of this divergence is, gosh, if at some point, I think it would be a Christmas gift to every trader if we don't have to use the word Brexit again in a sentence. It has it been more than 2 years? It's got to be more than 2 years. This was going on before you and I started working at the exchange.
Yeah, so, they voted on your birthday, I think, and there was some activity there, but it's been prolonged. They kicked the can down the road. You and I speak to a lot of guys over in Europe and in England, and it's just always a bug. It sounds like they're talking about it and what's going to happen or when's it going to end. And certainly we've seen it in the sterling FX. So,
you know what, Mike? It's interesting because I think one of the interesting things is because there's so many products and the liquidity during the U.S. hours. U.S. traders tend to be U.S. centric. We look at things. Everything we trade is basis dollars for the most part. So we have a lot of dollar exposure, even though we don't realize it a lot of times. But you're right. You go and you talk to UK traders in France or in Germany, and this overall arching, they seem to incorporate that global part of the trading community much more so than we do. And I agree, after our last call with the UK trading group, it almost seems like exhaustion. Like they can't, it's like, just make it stop. It puts into not jeopardy, but so much uncertainty around, from everything about the tradable opportunity, the products they trade, to actually where they live. So it's an interesting piece. Now, so we've seen this divergence. It's actually played through a little bit of general dollar weakness. And for me, the last 2 months have been more about an opinion on the dollar than any of the particular currencies. So I've been trading a lot more Smalls Dollar Index. And, one of the things we want to do is speak to the benefits and the simplicity of this trade. And I want to go through here. So we've seen an interesting extreme here. An extreme that I right now at the moment, I find much more interesting than the euro 200 points off its highs, or the pound smack dab in the middle of that range of 120 to 131. This is a more directionally traded opportunity on both sides. You've gotten a 200 tick or almost a 4.5% bounce. And guys, remember, a 14% move in silver, it's a different animal. A 4.5% move in a currency is a relatively large move. So if you want to trade the resumption of a dollar bearish trade, you've got an area where it starts to become interesting to possibly layer that. If you think the line has been drawn in the sand for the short term, there's definitely long dollar trades to be had. But let's take a look at a little bit of the makeup of this small dollar index. Now, this is one of the nice things is small US dollars, combination of 7 currencies. So you've got what we talked about today. You've got euro, yen, and sterling. We'll call those the G7 foundationals. But Canada and Aussie, I would say 7 days out of 10, the Aussie dollar does more volume than any other currency except the euro. And you'd think, why is that? Because 20 years ago when I traded Aussie and was still on the floor, it was 3 dudes. And I would go in and out on occasion when it moved, but it was basically a market with 3 guys where you're trading Euro FX. There were 200 guys. It was a relatively small, they would call it a developing currency. Now, the Australian dollar becoming really the focus of the free-floating proxy for much of Asia, that is, especially China, which has a fixed peg currency within a range, that Aussie dollar becoming an important component of a dollar index. So what we've done here is created a dollar index that's more relevant in the world we live in today. We always talk about smalls products living in our world of everyday, the everyday self-directed trader, the people's exchange. We built with that in mind, from the platform, from the way we charge fees to the subscription to the products. So what's nice here is, if you're looking for a simple expression, you've reduced selection dilemma. Which one do I pick? And I think looking at the most correlated pair, the euro sterling piece that we talked about, pretty dramatic divergence. That's a trade. We're going to set that aside because it's not smalls or traditional FX futures. It's smalls and. So this addition, it's part of the opportunity. That's what we want as traders. I use this analogy probably too often, but traders are like sharks. If they're not moving ahead, they're dying. And when I say moving ahead, evaluating and determining whether a new product fits their account size, their risk profile, and they can build strategies around it. And this is a product I think fits that bucket very nicely. So you remove some of the Brexit knucklehead noise. You remove some of we got a new prime minister in Japan and got a 200-point rally that is slowly getting eaten away. It takes some of that out. And I think that oftentimes creates for a cleaner directional trade. So, think about, this doesn't make this trade more difficult. This actually takes away some of the uncertainty that lives in each of these currencies. And you talked about this wonderfully, the unique relationship of each currency to its own situation and its own effects. It kind of gives you a cleaner trade. And here we can take a look at, we've seen this happen, and the push and pull. And I often talk about, we'll see that move, and I'll mention that, well, that's a cross move. It's the cross driving the market. Now, if you want to go down the rabbit hole of currency trading, sure, all these pairs, euro, sterling, yen, trade against the dollar. But in terms of the spot market and the global nature, that euro sterling cross, which has nothing to do with the dollar, it's sometimes a very heavily traded pair, and it almost adds some noise that we don't see to the process. So there's a push and pull that exists there that sometimes distorts our opportunity around trade ideas. Now you can see the very simple theme played through here of the inverse relationship between currencies and the dollar. And what I think is taking out a little bit of noise of this pairs trade. And when it's not a dollar move and I could choose my euro or sterling, but euro sterling's move, and that's a trade that you're going 3-4 steps down the rabbit hole. We always like to say, I want to take my ideas to execution. Setting up euro sterling is anything but that.
Yeah, I agree. It's one of the great benefits of currency trading too, Pete. And I think you know this from your days on the floor, but I can remember looking for a trade in FX, knowing I wanted to stay engaged, maybe looking at pound on its own or looking at euro on its own, not loving it, but then being able to create a cross, being able to take a different view on the FX market, either using the pairs, or I think in this case, just using a simple expression of the value of the dollar in SFX and finding some opportunity there. So this ability to mix and match or have a new perspective, maybe a more holistic representation of the dollar and trade that opinion, it's a nice beauty to have. I mean, I read about, probably, I'm sure you guys all do too, all the viewers, you read about the value of the dollar in the news every single day. But what is it being valued against? I mean, Bank of Japan, you have the resignation of Shinzo Abe, you have all the news, and I hope my pronunciation is right. My Japanese
no, I
totally rusty.
No, I applaud you that, I know somebody resigned, but at this point I couldn't have told you his name. And
you shouldn't feel obliged to have to learn and speak Japanese just to trade the dollar. I mean, I think if
perfect. That's a perfect takeaway. Another step in the process. I think part of what we want to do, Mike, and we always think about this when we build product, is how can we take steps. We've removed one of the great barriers, which is size. Size kills, and we've given traders the opportunity to start trading with smaller size products. But you're right, every level of complexity, I think you and I and Frank and so many of the teams come from different worlds of professional traders. And that level of complexity was something we learned. And it usually was an expensive lesson because there was complexity, especially around movement. And we realized we had to change that dynamic if we were to really bring the next iteration of products. And I think to say that, well, smalls is just smalls futures. They are small, but that isn't where the benefit stops. And it's that expression of opinion. And I love what you said. I hear about the dollar every day, and nobody talks about the dollar and euro or the dollar and yen. It's about the dollar. Mm-hmm. I hear about that. That's what I know. That's what I want to trade.
And when you interpret this chart, and this is, there's a lot here, but it's nice to see this relationship. You know, if euro is increasing in strength relative to the dollar, that just means the US dollar line is going, you know, down, right? If the pound is strengthening, the dollar is going down. That's how you interpret the small dollar index. That clean, it's just clarity of thought. You know, you have an idea to go long the dollar. Here's the chart. Is it going up? Is it going down? Form your opinion and decide on your strategy. So it's much cleaner, I think, which I really appreciate.
I agree. And I still catch myself saying that, having to take a pause and say, yeah, you know, all these currencies are down. We're seeing some dollar strength. And I always catch myself, is that dollar strength or dollar weakness? No, it's dollar strength. It's because that inverse relationship. And that in and of itself, if you've got to catch yourself thinking about that, that's a barrier to adoption. And it's a simple one, and you get the inverse relationship. But when you catch yourself as part of that process, having to think about that, it slows you down. We want you to be able to speed it up. To, you know, people who never thought, I don't quite get these currency pairs, there's confusion, I don't know what to trade. I realize the dollar is important and it's different. I've got, you know, we talk about diversification, Mike, and you've done such great research in your career around relationships and correlations, and we know what a diversified equity portfolio is, and that's the first iteration of diversification. Adding independent occurrences, whether it be the dollar or precious metals or some of the other products coming down the road, is an important second level of diversification. What's the lift involved in putting that into place? Sometimes it's overwhelming, and we can talk about the size mismatch. We all know that. Sometimes we only feel that under pain. But the ability to truly diversify starts to bring some of these products into play. So just to run through weightings, you know, euro is the largest traded currency after the US dollar. So it would be appropriate to have the euro in here. So your opinion on the US dollar is safe from event risk in individual currencies that are not the dollar. This, again, is a theme that resonates. I want to trade my ideas, and we always know there's unknowns. And every trade we put on, there is unknowns from day to day, from tweet to tweet, from resignation to resignation. So, but the composition here is, I believe, a more relevant dollar index in what we look at and trade today.
Yeah, especially you look at the second component on here. I mean, this is weighted by the size of the economic region. So euro being the number one currency, China is, you know, the world's second largest economy. It makes sense to have a little bit of renminbi exposure, especially when the world is so global in nature. I mean, again, you open the Wall Street Journal, you open the Financial Times, chances are you're going to read an article about China and the Chinese renminbi. So I think having a currency product that's representative in this way not only makes it a cleaner expression of the US dollar, but it makes it a little more relevant in what you're reading about and hearing about on a daily basis.